Okay, so this is kind of a complex thing, a little above average, what I normally could do, but I'll try to be as clear as I can. Why does the US have recurring trade deficits, and why has it had them for like such a long time? Um, Obviously, the US, even before the USSR fell, was like the dominant global power. Like you could argue that the USSR was like a solid second, and it was, but like it wasn't the first. It was definitely the US is first, the USSR is second. The US has been the richest country in the world for at least the last 100 years after World War One, and more realistically for the last 120, 130 years. And since 1945, it's been stupid. The quality of life, the level of wealth, the opportunity, the amount of investment opportunity in the US has been unparalleled. And obviously, since 2008, I think it's been falling a little bit, but it's still like the undisputed global power. So let's start with that first. So, why would the undisputed global power have a trading deficit? And this might seem weird if you don't understand what a trading deficit means. Because what a trading deficit means actually is that you're sending more money out and getting more goods in. And so it's a deficit because you're sending more money and receiving less money, but you're receiving more stuff. Like on the other hand of this, you're receiving more stuff, you're sending out less stuff. So obviously that's a good deal for you. And so how can the US recurringly have that like negative trading balance without, for example, the US dollar devaluing? Because that's what would happen. Like if you're constantly buying more than you're selling, if you're buying more than you can afford, then naturally your currency will devalue in a way that makes outside products more expensive and makes it so that the deficit lowers or even like evens out, or maybe you actually get a quote unquote super avid or something like that. But it still doesn't exactly happen that way in the US, in the case of the US, because of a couple of things. First, because the US is so open to foreign investment. And so, obviously, a lot of countries, a lot of people, I'm from a third world country, I'm from a developing country, and the amount of people there that want to invest, some of them want to move to the US, everything. But the amount of people that want to invest in the US is insane. Like a lot of people, they genuinely just start buying dollars because they know that the currency, at least related to the local currency, will appreciate that the US has solid property rights, that it's open to investment, that there's not stupid, huge taxes, that it won't take your money like China could or like Russia could, that it's a country that's pretty much safe from war, contrary to like Eastern Europe, for example. Even if Poland or Estonia are very solid, they're right next to Russia. Whereas like the probability that a country will directly invade the US is -1. Uh, so that's one thing. Like a lot of people want US dollars, and they want US dollars because they want to invest in the US. And so they have to trade their local currency for the US dollars to then buy US bonds or US stocks or whatever. And so this flow of investment allows the demand of US dollars to increase, which furthermore allows Americans that earn in dollars that can literally just print out dollars to buy even more stuff abroad. So that's partially the reason. But there's a deeper reason than that, which is that pretty much since 1970 or 71, uh, and even before that, pretty much all global currencies were tied to the US dollars in a way or another. Like until 1971, until we broke off the gold standard, it was officially tied to the dollar. Like the dollar was tied to the gold, and every other currency was tied to the dollar in a way where obviously, since you wouldn't be regularly trading gold, you would end up just buying dollars and trading dollars. And so, because it was, like I said, a stable country with a big military that wouldn't like fuck up anytime soon. And so there's that. But also, after 1971, with the gold standard abolished, the U.S. dollar became the gold, and it just like other countries literally just buy U.S. bonds as though it was gold. And it doesn't just happen in poor countries; it happens in pretty much every country that wants to be to have a good reputation. They have to have U.S. bonds, U.S. government bonds, and U.S. dollars in their treasury, pretty much, just waiting to be sold, waiting to for a crisis to happen to be able to like uh, afford a soft landing for their economies, let's say that. And any trade that happens between pretty much any country, like if Brazil wants to trade with, I don't know, Europe, everything is passed through the US dollar. So you would buy US dollars, and then with those US dollars, you would buy the goods. You wouldn't pretty much never buy euros directly, for example, from BRL or from Australian dollars or whatever. You would just buy dollars and then buy euros. And so what effectively that means is that there's a increased necessity for the US dollar. And obviously the US as the sole provider of US dollars has and can print as many of it as it needs, which is why even though the US dollar has been increasingly being printed to a point where I don't even know what the government deficit is anymore, and how many trillion of dollars have been printed by the central bank, by the Fed. Uh, Inflation hasn't been too terrible. It's been bad, but it hasn't been too terrible. And in part, it's because all those extra US dollars are partially sucked in by people from abroad who need it for trade, who need it for investment, who need it for pretty much everything.
The main point I think you need to take from this video, if anything, is that this is really good for the US because it can sanction other countries really, really effectively because it can actually buy much more stuff and get much more stuff in at lower prices than it otherwise would. And because US wages in general and workers in general, they have really, really inflated wages on a worldwide scenario. Like what would consider be to be like a poverty level in the US is actually upper middle class in Italy, not in Brazil, not in China, in Italy. So, like the U.S., because of this trade deficit, and because of like so much investment from everywhere else that's thrown into their economy, and because it has the worldwide currency, it a lot of can afford a lot of things, including a lot of stupid things like uh, printing money and all that. But it's overall very good for the U.S. And uh, because of some very narrow things that have happened recently in the last 30 to 50 years, namely the Rust Belt, pretty much, and like U.S. losing manufacturing jobs, uh, Trump and some other people, whatever, they they've been trying to change this scenario. And honestly, the countries that benefit the most from this change in scenario are actually the countries that you think Trump is trying to attack, like China, like Russia, because weakening the US dollar uh, and putting tariffs on other countries is going to, and also putting barriers on investments into the US, which is something they're also considering, will overall lower the value of the US dollar. That's one thing. Second, lower the demand for it. And then third, pave the way towards a globe or a world that is not dependent on the dollar. And if that ends up happening, or as it gradually happens, U.S. wages are going to go down, not in absolute terms, but in relative terms compared to other countries. Uh, the U.S. dollar is going to fall in value, which is what causes this first thing in the first place, which also means the U.S. Consumer is going to be able to buy less stuff, and not just that stuff that's directly brought from abroad, but also stuff from inside the U.S. because it's either going to be manufactured with an expensive labor, which is, well, American labor, or it's going to be manufactured in America, but with lots of things from outside America, which were tariffed and taxed in the first place. Uh, and the possibility that BRICS or Russia or China or whatever are going to be able to provide an alternative currency actually is higher. It would still be low because those are really, really unstable, terrible countries, but it would be higher. And yeah, it pretty much just lowers trade. It lowers the comparative advantage, which is pretty much the main thing about free trade. And one thing I wanted you to think about is like Americans lost a lot of manufacturing jobs, especially in the Rust Belt, but we've created so many other jobs that are so unique to America, you know? Like there's so many software developing jobs, there's so many finance jobs, there's so many jobs that are in a way more desirable. Like Would you rather work in finance in an office? Would you rather work as a software developer and travel the world, or would you rather like work in a factory? So like the idea that this division of labor, where the Chinese or the Vietnamese or the Japanese, and back in the day, they're making the cars, and we have the worst end of the deal because we're not making the car anymore, and we're seated in air conditioned offices, just testing out investments and uh, clicking things on a button or something. The idea that that is bad for us is insane. Finance jobs are great. Software development jobs are great. Technology jobs are great. Uh, and overall, that is how things are meant to go. The U.S., as the one of the freest economies in the world, one of the most robust, richest economies in the world, is going to have its workers that are very productive work on the things that they do the best, and that is Silicon Valley stuff. That's agriculture, which the U.S. is excellent in. That's oil and gas, which the U.S. is excellent in. But it can't be everything. It doesn't matter that Michigan lost the jobs. Like, and I'm really sorry that Michigan lost the jobs. I'm really sorry that Indiana lost the jobs. But like those people, they weren't. Do you think those people have been unemployed for 30 years? They haven't. They've changed industry. They've moved out of state. And if anything, the lack of jobs in those particular states are due to US internal policy and to specific state policy. Because if Detroit hadn't been really bad to business in the 1970s, maybe Detroit would have been the Silicon Valley. It only changed towards California because California had a more favorable climate. And so, not weather like, though I think that makes a difference as well, but a general business climate. And the best thing that Michigan or Wisconsin or whatever can do is change their industry and realize that maybe you don't have to only be a car manufacturer, and that you could do something else and innovate and use your comparative advantage within the US and especially abroad to actually make what you make best. And that is a much better solution for those states than artificially putting tariffs so that those cars can be produced in the US, and US workers would have, first of all, more expensive cars, and then second, less desirable jobs, because that's what they are, less desirable jobs. And the US has been able to have its cake and eat it too. And on the basis of being the global superpower, it's been able to afford making bad decisions and affording its citizens much more than pretty much any other country on earth, and having a really high wage ratio, a really low house to income ratio, which is house price to income ratio, which is great. Uh, and it might be coming to an end just because some stupid morons don't know the first thing about economics. And everything I'm saying here is not controversial. Like, it's not controversial at all about anything, about any economists. Like, if you're like a Marxist, you believe that. If you think Keynes was right, you believe that. If you believe Milton Friedman, you believe that. If you believe Friedrich Hayek or something, you believe that. This is a non-controversial issue, and all the politicians are doing exactly the opposite of what the empirical evidence suggests. And I guess that's what we voted for. So let's deal with that, right?